Hey, good afternoon, everyone. This is Sam, and I'll be kicking off the state of the market for August 10th, 2020. Can I just have a confirmation you guys can see video and hear audio, please? Okay, we'll wait just a second here to get confirmation on everything. And if you could just leave me a comment in the chat that you can see video and audio, and we'll go ahead and get started. Okay, looks like we're all good. Good stuff. All right, thank you much, guys. Appreciate it. All right, so we're going to try to go about 30 minutes here for the state of the market. Um, if you have any questions, go ahead, feel free to put them in the chat. I'm a little bit laggy on the stream, so it'll probably be 30 seconds until I see the question. But if you have any questions for me as we go along, feel free to just put it in the stream and we'll go from there. So with the state of the market, I typically like to kind of give you guys a big picture view of what I'm seeing, and and just kind of give you the big levers that are pushing things. So let's go ahead and start here with SPY, the SPY. The main thing that I think is important here is you've gotten really close to your 339 previous all-time high. You're really, 1% away from that level, um, trading 335 and a half currently. The setup has improved dramatically. You still don't have perfect structure here, but you can see it's been holding this 21 on the daily pretty consistently, right? There hasn't been every test of the 21 on SPY has been a great buying opportunity. Um, it doesn't have full structure here. You'd want to see the orange above the red, which is the 100 over the 200, but you can also see that it's kind of working itself out. In the short term, I do think that this level 339 is right in the crosshairs. I don't think we came all this way to not get through that level, but at the same time, I'm also not seeing a great fresh setup. I don't see anything that would tell me to sell or anything like that, but it's just kind of getting sandwiched in here. You see how in the 130 here, if I draw in the 8 and the 3 ATR, so the dotted lines are the 3 ATR, and the white line is the 8. You see how when I trace them in there, it's basically just following a channel between 3 ATR up and the 8. That's pretty hot in terms of price action. There's no issue. It's holding structure just fine, but you have to see that continue to build. And that's kind of a question as to whether it will. I think it will. But let's move instead to what's moving even more than SPY and maybe has an even more potent setup. And that's going to be something like IWM. So this week, as well as beginning last week into this week, we are seeing a rotation, and we're seeing a rotation out of momentum tech. And this is everything in momentum tech, right? We tend to get that question a lot. It's like, when I say momentum tech, that means Zoom, Shopify, Amazon, the FANG stocks, the cloud names, Okta, Now, Adobe. You guys know the names, right? So we are seeing a rotation out of that into value or into small caps. I do think this setup can continue. Basically, you did put in a nice bottom there at the 200. You see all the test of the 200 here, and then the go. That's pretty solid. Also, not only that, but you also have more room to run on the weekly versus the other indices. So if you're going to see good positive momentum anywhere, it'll probably come from here. And I know that's a very difficult thing to say because the IWM has really bad components in it. It's just banks, energy, things that nobody really likes. But it also is one of the things that's set up to run. As long as we're here, I'd like to show you this because understanding that IWM is the worst index, check this out. So if you go to a monthly chart on the IWM, um, one, you see how great of a good job it does at being rejected at 3 ATR or being 3 ATR down as an extreme buy level. But check out this squeeze here on the monthly IWM. Now I show you IWM because it's the worst index. If you look at any other index, SPX, SPY, the QQQ, even DIA, they all will look better than this. But I show this one to you because it's the bottom of the barrel, and it's starting to look pretty good. You're back above your monthly 8, 21, and 50. Your squeeze is flat, so you can go either direction, and your momentum signals say higher. So again, reason I show you this is because this one has two reasons. This one has the most room to potentially run, and two, it is the worst sector in the market. So when it has a decent looking monthly squeeze, that bodes very well for everything that looks better, such as SPY, SPX, and things like that. The next thing I'd like to show you here is an idea that I'm working on. It hasn't yet triggered fully, but it is something that I'm kind of working on right now, and it is the potential that bonds are actually a short. Now that goes counter to everything, right? Bonds have been in a arguably 1,000-year bull market, and certainly that's become sped up recently with the actions from Fed. I'm just going to show this to you on TLT. I think that captures it well enough. But the idea here, and this is really probably the most important thing we're going to look at today, is if bonds, TLT, if TLT does in fact break lower, what are the effects that it has on the market? There's some things that will like that, and there's some things that won't like that. So the things that are going to like TLT going lower primarily is going to be the banks. So the banks should enjoy that quite a lot. Let me just make sure I'm still recording. Looks like we're good. So down here, if this breaks, now it hasn't yet broken, right? You really would need to see the 21 break here, but I have a lot of early signals that are telling me that it could be coming pretty soon. Wait for a trigger, wait for a break of the 21. But if this chart were to break down and you make a double top up here, right? Basically across 172 double top, and bonds start going this way, tech actually doesn't like that. Tech actually prefers bonds going up, and so does anything that's momentum based. Sectors that do like this going lower are going to be banks, industrials, and small caps. So IWM, basically the same thing. And I'm just going to put a plus sign here. Now, what doesn't like this dynamic? Well, the QQQ. And specifically, the FANG stocks. It doesn't like this. And so if this triggers, this would then put in that rotation element, right? Because if bonds break lower here, hopefully this is making sense, but if bonds break lower here, you see how this has been what's moving the market, right? For months, arguably years. This. But if bonds actually break lower, that actually becomes out of favor, and instead the market looks to favor this, which it has been out of favor. So in this group as well, I would include the reopening stocks. So it's very difficult, but the cruises, the casinos, uh, commercial real estate, stores with physical stores, Best Buy, Ross, Burlington, Walmart, Target, all those stores. So if you guys have any questions on this one, let me know. But this is probably the most important thing I'm going to show you today is just the potential that TLT could be double topping here across 172. And if it is, the dynamic that will have across different stocks. So aside from that, let me just look at my notes here. So I did start nibbling on banks last week. I guess I can show you that. Keep in mind also that banks are the most difficult trade in the market, in my opinion. But just understanding this dynamic, you can kind of see what's setting up here in the banks. So here on banks, I think they're basically going to retest the 200. So I don't think there's a ton of room unless they get through that 200. But you see here how on XLF, this Fibonacci overlaps with the 200 here. So there's a couple positive things on XLF, and I'll just go through each one individually. There was a major level here at 24 and a half. You can see it was the high, the high, the high, the high, and then it breaks. So what do you have? You have a trading range here, right? You see the trading range, and then you get the breakout. Very solid stuff. Also, you've put in that low and that low. So you have a higher low, you have this high, you have this high, and you have now this high. So you're putting in higher lows and higher highs. And all your momentum indicators, unlike a lot of things in this market, look really early and really good. So this actually has a decent signal here. I think we're heading to 26, which doesn't seem like a lot, but it would be 4% higher on XLF, and basically looking for this test of this 382 that overlaps with the 200. Also, lastly on XLF, do you see how the weekly chart has the 200 week, the 50, and the 100? You see those three moving averages all lining up at 26? This could be a game-changing level on XLF because either A, we're going to go up to it, get rejected and fail, possibility one, or possibility two, we go up to it, pull back a little bit, and then break through 26. If we break through 26, it's a game changer. It's a game changer because this is the worst sector in the market, and this level, hopefully you can see it really clearly with my indicator set, at 26 has every resistance in the world. So if it gets above 26, the worst sector in the market, getting above a metric ton of resistance would be considered pretty bullish. So a level to watch there. I think the low hanging fruit is just try to buy it on a pullback to 24 and a half and take it into 26 and sell and let the market prove itself to you there. So just a couple of ideas that I shared on that was Bank of America. This is the strongest one in the group. So Bank of America, JPM, which in my opinion is probably the second strongest in the group. You do want to find strength in these names, right? I don't think there's a lot of edge in buying low quality banks, but the high quality ones like JPM here make sense. Bank of America. And then if you want to turbocharge the idea, then you'd look at something like FAS, which is the 3x levered financials. So pretty difficult trade, but it's kind of what's in the crosshairs here. So if you guys have any questions for me, let me know. We have a little bit of a small audience today. We didn't really advertise this too much. So, and I am covering for Joe, so I don't know how many of you guys were expecting Joe. I think I'm going to go ahead and just cut it there. And if you have any questions for me or anything you'd like for me to look at, let me know. Would I expect the bond trend, if it confirms down, to last for weeks or months? I would expect for it to last weeks, and here's why. There's a couple ways you could look at the bonds. My least favorite is actually TLT. Now, if you were to trade it, you could definitely short this or buy TBT. My preference actually is just to buy the banks. But if this were to break, right, and of course it needs to trigger. It hasn't yet broken the 21. It's still early, but there's early good signs that this is going to break here at the 21. You just lots of negative positionings here. So if this were to break lower, I expect for this to last weeks, and the reason is because over here on the weekly chart, you actually have a weekly squeeze. It hadn't been in a weekly squeeze in probably 6 months, and this sideways action here in bonds has allowed this weekly squeeze to develop. So whatever move you get from this, up or down, it should be sustained, and it should be upwards of a month to probably two. So I'd like for it to last a little bit longer. Here's another way to look at bonds. My least favorite is TLT. I show it to you guys because it's the one everybody's familiar with. My preferred method of looking at bonds is actually this. And you have to understand that they're actually inverse. So this chart going lower is the same as TLT going higher. And that can be a little bit confusing. This is why I don't typically talk about it. But what I'm seeing here on this chart, and this is the TNX, so this is just the straight up interest rate. This is the 10-year interest rate. You see how it has a value of 5.74. The way you read that is just put a decimal in front, and the 10-year interest rate right now is 0.574. Right? So if this chart were to go higher, that would mean the interest rate is going higher. So let's say zero point 0.6, which would be a higher interest rate, and that would take TLT lower. So just understand it's inverse TLT. But there was a dynamic here where this was trying to break down below this really important level at 573, and it's basically there now. But in doing so, it's actually made a little bit of a trap and a potential bottom here. You see how it's broken above the 21 here, or the 8, for 2 consecutive candles now? It has not done that before. So at least not since this start of the downtrend. Each test of the 8 has been a sell, and you see how right there it's closed above it twice, and your indicators are all crossing positively from the underside. Also on the weekly chart over here, you see how you were deeply negative, and now you're rounding back out to neutral. So there's some. It's very early on bonds. I do have to say that, and ideally, you really would want to see this break the 8 on the weekly as well. But if this snaps back at all, this should take TLT lower, and it should be quite lasting. So thank you. Play the bonds down through the banks to the upside. Yeah, that's a way that you can do it. Now the banks to the upside does factor in the market going higher because if the bonds were to sell off, it's very similar to oil going higher, right? So the interest rate going higher or TLT going lower is the same thing for the banks as oil going higher is for Exxon, right? It's their commodity. They sell the interest rate essentially. So if they can get more money for the interest rate, better for the banks, right? So I do prefer playing it that way because the market is still bullish and that dynamic is, and banks have a setup, number one. I wouldn't play it if the banks didn't have a setup. But just be aware that that does have market risk. So if the market pulls back at all, the banks are going to get hit. The more direct play, and this one is also has some pros and cons, but the most direct way to play the bonds short is to either short TLT or to go long TBT. So TBT here is an alternative option. And you see how much TBT looks like TNX. Hopefully that makes sense. It's the inverse of TLT, which is very similar. So there's 2 different ways to play it. You can either buy the bank's XLF or any specific bank that you like, or play it through TBT long. How does this play with gold? Dollar looks to be bouncing. Yeah, I would tend to agree with that. I think the dollar has just been beaten up more than, well, historically to a significant level. I would agree with that. You see how the dollar here is also closing above the 8 on the daily? So the dollar here has been pretty trashed. And at this point, I am of the full belief that we're going to get a bounce here in the dollar. One, you've met an extension target, right? You had this big range from here to here. 1 second. So you had that big range, and that range gives you a downside target right here. And you can see that we pretty much got there, number one. Number two, you see how the dollar, once it broke here, it started trending down on the 8. That's a very aggressive downtrend, right? Now, since it's a very aggressive downtrend, when it breaks the 8, it's also significant. Well, you have the break of the 8 there. So that's 2. On the weekly chart on the dollar, 3 ATR is this dotted line. This never happens on the dollar. You never see the dollar sell off 3 ATR down on the weekly. That's 3 average true ranges. And you see how that basically caught the low? It's exceptionally rare that you see that. It does signify that it's incredibly oversold. And then the last thing that's telling me it's oversold, on my indicator right here, the trend oscillator, you see how the red line has gotten below the lower line? That never happens either. That only happens in extremely oversold conditions, and that's signified in a lot of different ways. So you have 3 ATR weekly down, you have 3 ATR daily down, you have a red line on your momentum indicator, which is exceptionally rare, All three of these things are exceptionally rare, number one. Number two, you have a little bit of a divergence here where you made this low on this low here. You see how the low is there? And then you make a fresh price low and the indicator is flat. Do you see how these two lows are the same? Normally, you would expect for this to be lower than this because you made a new price low and you had a big momentum down push, but it's not. It's equal. See that? Price down, indicator sideways. That's a divergence. So it's not confirming the new low. So long story, long way of agreeing with you, Nathan. I think the dollar can bounce here. I don't think it's going to bounce anything too crazy, but I do think it could bounce and test this 21, and maybe even bounce and test the 50. In terms of gold, I would be a little bit cautious. I don't see a huge amount of edge here. I think this thing has gotten red hot. I'm not pretty much just talking to the choir on this one, preaching to the choir. I actually shorted gold miners today. It's a risky trade, but I'm kind of seeing the level to do it. Basically, on gold here, it's a tough thing to say because it's so parabolic, but you have kind of a blow off top here in the way that I'm looking at it, especially on this day right there. You've traded down. Yes, you're filling the gap, but your momentum here is just too red hot, right? And you can see it's not confirming. I won't have time to get into each detail of this, but it's just not confirming. So what I did today, and keep in mind this is risky because you're basically shooting against a massive uptrend. Is I did buy dust, and dust is the 3x bear miners. So this thing's been so destroyed you can't even see the chart. But I did go ahead and buy some dust today, and basically it's just a short on the miners. And here you actually see the divergence again, right? So we were just talking about the divergence on gold that was not confirming. Here, you see how you have a massive downtrend here on the far right? And your indicator is making higher lows throughout. You see that? So you see how if you compare this low to this low to that low, you have three higher lows and a bunch of new low. And you have three higher lows, which is positive, while making new price lows. That's a massive divergence as well. So I decided to take a shot on it. This could turn into something pretty big, but it is also very risky. My squirrel friend just showed up outside. I can see him through my window. So we'll go ahead and cut it off here pretty soon, guys. Last minute chance to get your questions in if you have any. And hopefully that what's really clear is just the dynamic there of how bonds can affect the market going forward. Just understand that if TLT does indeed drop, it changes what the market wants. The market goes from wanting Shopify and Roku and all the cloud stuff that everybody loves, and it rotates away from that stuff and it rotates into the stuff that has not gotten a lot of love, which is the reopening trade, banks, transports, IWM, small caps, things like that. Will diversified financial sector benefit as well as banks? I'm not sure what that means, Alex. I'm not sure what that means. I think banks stand to benefit most directly. If you're referring to like credit cards or something like FIS, which is kind of a financial, half tech, then I don't think it'll benefit as much. For this dynamic really the concentration of the benefit goes to banks and reopening trades. So things like Darden, right? DRI. I think that's actually a really solid setup. You wouldn't think so, considering their restaurants. But if you look at the setup, it looks pretty solid, and it works very well with higher rates. So that's the way I would play it. All right, guys, I'll hang out here for another minute since we are a little bit on delay. But we also have a very small crowd here today, so we'll definitely go ahead and cut it off here in about 2-3 minutes. Okay, guys. Yeah, I'll go ahead and cut it off here. I didn't see any additional questions come through. Thanks for joining us today, guys. If you have any questions for me regarding anything we talked about, either A, if you're a member, just ask me in the room, or B, if you're not a member, or even if you are a member, you can send me an email, sam@simplertrading.com, and I'll be happy to help you out. But the main thing that I just want to stress to you guys is be aware of these things, understand the dynamic on bonds, also understand what happens if it doesn't work, right? Because the idea that bonds can break down is exceptionally counter trend. Exceptionally counter trend. It's they're in a 1,000-year bull market, so to say that they're going to break down is statistically improbable, but just understand the dynamics that would occur if that happens. Now, if they don't break down, then momentum tech will still continue to be the thing to do. Um, but if they do break down, be aware that there is a rotational element to that, and who stands to benefit and who stands to not benefit. All right, guys. Thanks for being here. I'll see you in the room, or I'll see you next time. Have a great night, guys. Cheers.